Most people think the silver market is calm right now, but behind the scenes, something very unusual is happening. Vaults are full, prices are disconnected, and the pressure is building. And when this setup breaks, it won't be quiet. Despite what the sign might suggest, I don't suffer from multiple personalities. But I do want to wish you a very Merry Christmas. And believe it or not, the COMEX is also having a pretty comfortable holiday season. Today, I'm going to explain why that is, and more importantly, why it may not last much longer. Right now, COMEX vaults are well stocked. In fact, compared to other areas of the global silver market, this is one of the few places not showing extreme strain. But that balance can shift quickly, and I'll explain what signals we're seeing. Before we continue, a quick word of thanks to Summit Metals for supporting this channel. They're one of the fastest growing precious metals dealers, buying and selling silver with excellent customer service. If you're interested, you'll find their link in the description below. This season is usually about giving, but for the COMEX, it's more of a season of holding, at least for now. Silver has carried value for thousands of years. It's woven into history, culture, and even the Christmas story itself. Back then, silver was used in betrayal, then discarded as worthless. Yet today, it remains one of the most trusted forms of real value across the world. That contrast is important. Silver has always played a role far greater than just price, and today is no exception. The COMEX as an institution has experienced increasing stress in recent years, especially as metal flowed rapidly into its vaults. After April 2025, fears around potential silver tariffs caused major disruptions across global markets. Although those tariffs never materialized and likely won't, the reaction alone was enough to strain places like the LBMA, the Shanghai Gold Exchange, and others. As a result, silver began shifting back toward those markets. While things appear to be stabilizing for the moment, that calm may be temporary. Recent reports show increasingly negative exchange for physical spreads across multiple futures contracts, December, January, February, and now March as well. This kind of backwardation often signals physical tightness and encourages continued withdrawals from the COMEX, with metal potentially flowing back to London or even Asia. We've already seen delivery activity increase in the December contract. All signs suggest a larger drain could be forming beneath the surface. For now, COMEX vaults remain well supplied, almost comfortable, but that could change quickly. What makes this situation even more interesting is what's happening overseas. Spot silver prices on the Shanghai Gold Exchange are trading well above US levels, recently pushing past the high $70 range. Meanwhile, futures markets in China and India are showing backwardation, something rarely seen. This tells us the physical market is under stress, even if paper prices don't fully reflect it yet. Add to that delays in unit issuance at PSLV, ongoing negative spreads at the LBMA, elevated lease rates, and heavy ETF activity, and it becomes clear that pressure exists across nearly every major silver hub. These forces have helped push silver prices above $71 an ounce, and the market remains extremely volatile. While tariff fears played a role, other factors are now driving momentum, including China's plans to restrict certain exports starting January 1st, and global demand consistently outpacing supply. We are now heading into what could be the sixth straight year of structural silver deficits. Even if we see a temporary correction or consolidation, the bigger question is where the new price floor settles once this bull phase eventually cools. Historically, major silver bull runs have only happened twice, in 1980 and 2011. Adjusted for inflation, silver has recently reached record highs, even surpassing 2011 levels. While 1980 was an extreme anomaly, a smaller version of that move isn't impossible, especially if high-net-worth investors accelerate their buying. Geopolitics remain a major factor. From unresolved tensions in Venezuela to long-term risks surrounding Taiwan, global uncertainty continues to support precious metals. Before closing, I want to take a moment to thank you, the viewers and subscribers. A supporter recently sent me a beautiful silver piece from Jamaica commemorating the country's 10th anniversary of independence. It's a reminder that silver isn't just an asset, it's history, culture, and meaning preserved in metal. Thank you all for your continued support. Wishing you a Merry Christmas, a Happy New Year, and sincere gratitude to every one of you.